Hey guys, Tony here. Welcome back. In today's video, I want to share with you a stock I sold today for a 51% gain after a hold period of approximately 4 months. 4 months and 1 day to be exact. And I know some of you are going to say 50% in 4 months. That's nothing. I do that every day of the week. Really, the point of today's video, yes, we're going to talk about this stock and the trading plan. But the things that I want to cover with you today are more than just having a plan. It's to go over with you again the importance of identifying a good trade, one where you can sleep well at night and not have to be worrying about tracking it all day, every single day. I want to talk with you guys about building up a diversified portfolio of stocks in many different sectors, stocks where you have safety, stocks where the revenues are increasing, stocks that have positive earnings. Now, a lot of you are meme stock traders in my audience, and that's fine. I am too. But the meme stocks in my portfolio are only about 6% of my overall portfolio. I know that might sound shocking to you because they seem to be the only videos that I put out. No one wants to watch a video about a stock that only makes 50% in 4 months. And those meme stocks have tons of clickbait and misinformation. And so I almost feel an obligation to talk about them often because there is just so much bad information in the meme stock communities that is preventing you guys from investing in solid plays like this and many others that I have in my portfolio. Having gotten that out of the way, let's talk about this trade, why it ran up, and then we'll close by talking a little bit about those things that I just mentioned, how to become a better trader and be able to sleep at night, still get returns that beat the indexes. The ticker that we're talking about today that I made the 51% gain on is Sofi, S-O-F-I, Sofi Technologies. Many of you guys know it as the online lender and bank. If you are a longtime viewer of my channel or a member of the Discord, you probably already know that I have been trading Sofi for quite some time, and many of you are as well, and congratulations on the run-up. I have put out here on the YouTube channel several videos about Sofi over the last couple years. This is my second swing trade on Sofi. I bought it back in 2022 and sold in September of 2023 for a 30% gain. And then after that run up in late 2023, I waited quite a while to buy back in Sofi. About 9 months I waited to buy back in, getting back in at $6.49 in June of this year. And then with that run up and this huge gap up yesterday on Sofi, setting a new 52-week high, I sold this morning at $10.25. I did not get the absolute high of the day. The high of the day was $10.49. And for all I know, it could go higher still. However, I'm going to walk through with you what the news was and why I sold today, and then what my plans are if I plan on getting back in Sofi. I'm not negative on Sofi. I'm not bearish on Sofi. I am swing trading Sofi. The news that made Sofi run up yesterday, October 14th, was this press release from Sofi that they are expanding their loan platform business with a $2 billion agreement with Fortress Investment Group. Now, this press release is very light on details, but what I have highlighted here in blue kind of encapsulates it. A $2 billion loan platform business agreement for personal loans with funds managed by Fortress Investment Group. This agreement will expand Sofi's capabilities in its loan platform business. In this article from MarketWatch yesterday, they explain that the arrangement is significant because the Sofi bears had been worried about Sofi's lending business, and through the agreement, Fortress is implicitly endorsing Sofi's underwriting model, and investors likely appreciate that the company is expanding its lending business in a balance sheet light way. A couple things I just want to reiterate to you before we close out this video. Try and have a trading plan before you buy something. Before I buy something, I like to already know where I'm going to sell it. And I had a 12-month price target for Sofi when I bought it in June that I was expecting it to reach around $10. And I have that supply zone drawn up there in red. And so here we are, only 4 months later, it already reached my target and it's in the supply zone. And we have a forward PE ratio now for Sofi of 95, which is really, really high. I decided to go ahead and take a swing trade exit and see if I can get lucky, wait for a pullback, and then decide if I want to buy back in. Now, for all I know, in the coming days or weeks, analysts could provide upgrades on Sofi after they have a chance to digest this latest news. And maybe it goes to $12 from here, or maybe it goes to $14 from here. But what I am trying to communicate to you is I had a plan and I am following my plan, and I am happy with a 51% gain in 4 months. I think at the current level, the upside is limited. I can deploy the capital now that is back in my account into a play that I think has higher potential, and I'm going to be looking for the next one. And if it pulls back down, then I will take another look at Sofi for a possible re-entry. When it comes to identifying the right stocks to invest in, there are literally thousands of them out there. How do we even start? I don't know your risk tolerance or what your goals are for your investment, so ultimately you have to decide that. But I think it is important that you do a couple of things in identifying the right stock. Number one, what do analysts say about the stock? Are analysts generally saying that this stock is a buy? Do they have a price target for that stock that is above the current price? When I was buying Sofi down in the $6 range, analysts had a $10 price target for it, and it was recommended as a buy. There were some analysts back in June rating Sofi a hold, and that comes down to you doing the work to understand the stock and then deciding, is it a hold? Is it only going to sit there at $6? Or is there some potential for this thing to move up? What do the analysts that have a buy on it see? And can I see that vision too? Do I believe in the management? The third thing that I want to reiterate to you guys is the importance of diversification, because I know there are content creators out there and people on social media that only own one stock, and that's all they talk to you about all day, every single day. In fact, they will tell you, don't diversify. Diversification is dumb. Just buy my stock. Guys, run away as fast as you can from anybody who is only telling you to buy one stock. Now, I know, I can't tell you what to do, and I'm not telling you what to do. You get to make your own choices, but if all of your eggs are in one basket, I think you know the story there, right? It comes down to risk versus reward. And if you want to risk everything for a potentially high reward, and the flip side of that risk is you could lose everything, and you're okay with that, then that is fine. But over the last 3 years, what I see time after time is people loading all of their money, hundreds of thousands of dollars sometimes, into companies which are marked a sell by the analyst, or companies which have no revenue, or companies which have negative revenue. And people lose 80, 90, 100% of their money in the case of a Chapter 11, and then they're looking for someone else to blame. Just make sure that you are taking the time to read the financial statements, read those 10Qs and 10Ks, make sure you fully understand them. Don't just get your info from social media. That is taking accountability for your choices and what we call doing your own DD. The last little tip that I want to leave you with as you finish up that DD and you fully understand the play, the stock that you're holding, then you can decide what is the risk in this play. Do the analysts like it? Is it generally rated a buy? Does the company have a history of increasing revenues and increasing profits? Then I might have a less risky play. If I'm betting on a stock that is generally rated a sell, has falling revenues, maybe no profits, then you might have a riskier play, and it becomes more important for you to understand that risk so that you can size your position appropriately. Like I said, for myself, my meme stock portion of my portfolio is sized at about 6%. I don't ever want to have 100% of my portfolio riding on one play, and certainly not on one play that is very high risk. If I did that and I was right, yes, the reward would be extreme, but I can't sleep with that type of risk. If you can, God bless you. Guys, I want to thank you for hanging out here all the way to the end. Let me know your thoughts and comments down below. I am Tony Denaro, and I will see you on the next video.